Good morning, good afternoon, and good evening to everybody back out there. We're back here with another episode of Between Bears and Bulls. I'm joined today. It's been a while since we've had him. He is the expert in corporate America. He has worked for the largest of the largest companies. He is, when I say, I'm proud of having this man as a professor. He is one of the most knowledgeable in companies and corporate structures. We're joined today by Everton Thompson. And
yeah, your check's in the mail.
And as always,
I knew there was some bribery going on here.
I know. I'm going to hire him. I have no job openings, by the way. Anyway.
And as always, we're joined by Yinka Majikadumi. He is the CPA for Miami-Dade County. He is a very, very busy man. He's made time for us today. Yinka, how are you doing today?
I'm doing great. I'm not as busy as Professor Thompson, man.
Thank you. I'm not sending you a check.
He's sending me a check, but for $5, not for more.
Thank you. Thank you.
Every dollar counts with compounding, okay?
Yes, yep.
That $1 is going to go to buying a water bottle.
In 20 years, that would be worth a nice chunk of change, so I'll take it.
20 years.
So today we're going to be discussing behavioral biases. We'll be discussing investor psychology, overcoming emotional pitfalls, as well as politics and how they affect the economy. So we're going to kick it off, first and foremost, with Professor Thompson. If you can tell us a little bit about the way people behave as investors.
One of the things to keep in mind is just as normal people, we have emotions.
Mm-hmm.
We're emotional. And a lot of things happen to us on a day in and day out basis, right? Prices of goods go up, we get fearful,
Mm-hmm.
right? We hear about wars, we hear about changes in the FDA could come out with changes, right? A lot of things can happen in our lives, right? And we can get sort of emotional about it, okay? And the key thing about being emotional in business and it being emotional in investing, they don't go well together,
Mm-hmm.
right? And so we have to, there's a reason why we go out and we seek advice. And yes, there's a lot of things that are going to happen in the environment, in the industry, but we have to be cautious. We have to be cautious. And I believe many times the experts,
Mm-hmm.
people that invest, they're looking down the road. A lot of the things don't come to them as a surprise.
Mm-hmm.
We might affect us today, but remember, you're just one of 250 million people, right? Everything doesn't affect us the same. And what I believe is, in general, in a free market system, which is, my background here is to focus on the business aspect. In a free market system,
Yes.
The more uncertainty in this, the worse it is for investors. We don't like uncertainty.
Mm-hmm.
We want more to be more structure, right?
Mm-hmm.
Uncertainty makes consumers cautious, and they can make big, bad decisions.
Mm-hmm.
So what kind of things, Inka, are you seeing from those investors that are emotional? Emotional investing, what is your feeling about emotional investing? And how does that, and what's some of the pitfalls and some of the things you should keep in mind? Because things are going to happen, right?
Exactly.
Right, there's going to be...
I think emotional investors are a very interesting group. They are in the group of investor behavior that we call followers, most likely. Most of them are followers. And what happens, right? Last week we had a good conversation about the different stages of investing, and we talked about there's a point in time where people, I'll get technical for a little bit, people increase trade volumes.
Mm-hmm.
And because they increase trade volumes, it has a ripple effect. There's more people seeing the volume, and they believe that's a good thing, and they jump in the market. That's what Professor Thompson is alluding to, the reactionary people, the emotional investors. And typically you see them buying at a price that's not the lowest. And when the when the market is in a decline, you see them selling at a point, at an optimal, a not optimal price point, because again they're reacting emotionally. I guess the young people call it FOMO. Right? I think that's a FOMO, fear of missing out.
Yes.
Is that what
yes,
they call it?
that's what
Okay,
they call it.
I'm a little bit too old to. So you often make poor decisions when you are investing in emotion, and obviously most of the market sentiment is based on emotion, right? People see a stock, they like it so much, they like the company, and then they buy it. That's still emotional. But guess who doesn't really do too much investing with emotion? Professionals. The professionals use fundamentals. That's why they buy at the right time and they try to sell at the best time. So to Professor Thompson's point, the emotional investor is not the optimal investor, at least definitely not the one that we should follow. I think you want to detach emotion from investing as much as you can to limit your losses, right? But overall, I think strategic investing still has to be passive. So when you're passive, you could operate without the emotion. When you delegate it or you automate it, you're operating a little bit away from your emotion, and that's the safest way to go about it, especially beginners. That's the safest way to go about it. So I agree. And then you have the leaders, the independents, who invest based on their knowledge or their perceived knowledge. This group we normally, I forget who wrote this very, very good article about this group of people, because this group of people are normally people who have previous successes in some entrepreneurship space. They either sold a company, ran a company, so they're very confident, almost overconfident, that they know the right thing to buy, they know the right price to buy it. So they're completely opposite of the other guys, the emotional followers. They're independent, but they still make mistakes because they could be overly aggressive, right? Or they could think they know it all, right? So you have those two contrasting styles from those two groups. And neither of those styles are great, but we normally see a lot of those people as you watch the market. Whatever market you're looking at, whether it's real estate, you're going to see the followers, you're going to see the independents. Whether it's crypto, you see the followers, you see the independents. And then whether it's stock, you definitely will see followers and you see independents. And believe it or not, those two groups have a big impact on prices of those commodities or those stocks. They definitely drive it to their own dismay sometimes, but they drive it nonetheless. So,
Yeah.
good point.
One of the things that we hear, I hear all the time, that in periods of crisis, or whether or not, stock market is way down, or housing prices are way down, the regular consumer is kind of panicking.
Yes.
What's going on here? They're very, very short term. They're emotional, immediate.
Yes.
And what do you always hear? People are out there buying real estate when it's low. They see opportunity. So you have to put yourself, I believe, in a position where you take advantage of opportunities. When a stock is low, if you understand, like you said, the fundamentals of what's going on, then hey, this is a good time. I don't know all the fundamentals. I don't claim to be an expert on the fundamentals, but I do listen to Warren Buffett every now and then, because I think he knows what he's doing a little bit, right?
A little bit.
Just a little bit.
Just a tiny bit.
Just a little bit, right? And, I remember the first time I listened to him, I thought he was going to give me all this technical stuff, really I can't be able to follow him. I think he's the biggest company in the world. I mean, one of the biggest. And I remember him saying that, I look at the management team. What happened to supply and demand and market flex? None of that. One of the fundamentals I look at is the management team. Do I believe in this team? Do they have the right people in place?
Good point.
And that's how a lot of times he makes the decision.
Wow.
And I mean, we do that some in our day to day. Is who do we trust, right? Do we really trust this person? So sometimes, if you go to a doctor, some doctors tell you to do something, But if you're used to your doctor's always giving you good advice, has always recovered you, no matter what situation you get into, whatever illness you get into, if a doctor says, hey, this will make you better, you believe in it, right? So I do also believe that keeping your emotions, is easy way is to get somebody you trust. And Yinke will probably tell you, who do we trust?
Right.
Who do we choose to lead us when we're investing?
I mean, there's a lot of different people or organizations to trust. I mean, the easily said is that we listen to the market, but we trust the professionals. I think ultimately the professionals are there for a reason, just like a doctor is there for a reason. Doctor's a professional. I'm sure anybody else could give you a concoction to make you feel better. They could give you some herbal injections to make you feel better, but you're still going to be a little bit skeptical about it. I think the professionals are there for a reason, and that's the delegation advantage that we often speak about, because we're still talking about the main topic that we're still hovering on is removing emotion, right? To remove emotion, you still have to have the ability to delegate, because delegation, based on trust, like Professor Thompson said, is part of removing that emotional side, right? And that applies to everything, but it also applies to investing. You delegate to a professional, and you do what you do best. You do whatever it is. If you're a doctor, if you're a lawyer, do your law, do your doctor, do your carpentry, whatever you do, you're an accountant, be an accountant. And let the professionals deal with it for you, so you don't have to be so emotionally involved. I often said this, I think I said this 2 episodes ago, because there's this misconception about people who think they're investing. I said, if you have to check your Robinhood account 50 times a day, you're not an investor, you're a gambler. Let's know the difference. Unless you're professionally designed, or you're professionally practicing investing, where you have your monitors and you're managing accounts, there's a difference. And we have to just establish that. We don't have to deceive ourselves anymore that everybody should be an investor with the monitors on the beach and pretending to move things up and down. I think there's a big difference. I don't care what courses you take. I don't care what social media influencers teaching you courses on stock market. Once you get into a habit of becoming this person who's 50, 60, 70, 80 times checking your brokerage account or your Robinhood account, you have probably started crossing the line into more of a gambler than an investor. You may not know it, but that's the reality.
Okay.
Yeah, because you really have to think, we talk about it, you really have to think long term. And emotion can come from not just, somebody might sit here and say, oh, I'm a calm person. I'm really calm. I don't let too many things affect me. Well, there are things that you don't understand that might affect you, right? All of a sudden, your electric bill doubles.
Yes.
So all of a sudden you're thinking, oh, what's going on? And I'm going to choose, well, maybe I need to save my money. Maybe I don't need to speculate my money. Or maybe I need to, all of a sudden, even if you don't see any fluctuation in the marketplace, because it's physically affecting you, you went to the gas pump and the gas prices doubled, right? You're like, whoa, something happening here. You're allowing yourself to get, okay, maybe I'll pull my money out. Maybe there's something happening with the gas companies, and you are ready to jump and move forward. You really, when you are seasoned, right? When you're seasoned in investing, whether or not it's a business or a company, it's kind of like, the difference between if the food is burning or it's cooking, right?
Yes.
Right. So a lot of times it's just cooking, and sometimes we think it's burning because we haven't smelt it enough, because we haven't allowed things to go through its full thing. So it's never good to make any decisions based on emotions and too quickly.
And I want to ask, because this is just going on emotions. From my understanding, it's the best I can understand it is like a fight or flight type of response. Like when people see something that it scares them, they immediately choose either stand your ground or run away
Right.
from it as fast as you can. But how does politics also play into this? Because some people, they have a very biased outlook on what they want to do or how they choose to spend their money, depending on their political party of choice or depending on what they hear on the news. And I ask this because, so one, we have elections coming up,
Mhm.
right? Two, because between this week and the prior week, we've had a couple of meetings with the Federal Reserve. I believe it was earlier today, the Federal Reserve of was it California, Yinka, I believe it was, that had they had a meeting today, or she was I forgot I forgot her name, but she was on a fireside chat, and all these different things, not just this, but also there are like economic numbers that come out, right? The GDP reports come out, earning reports come out from large companies. Sometimes it's just basic numbers, simple index numbers coming out from around the world.
Mhm.
And investors, they'll react to this, and the more seasoned, to keep using the word you used, the more seasoned investors, they'll react to it a little more professionally, per se. Right? They won't exactly have a fight or flight response because they're more in control of it. But for the investor who isn't, in control of it, for the investor who's just new to this type of stuff, how does politics play into them?
Politics plays a huge role in society,
Mhm.
right? It does. Part of America is we have kind of a laissez-faire, kind of a, capitalism kind of thing.
Yes.
We want to keep as much as possible politics away from the business,
Mhm.
right?
Mhm.
So that it operates freely. We try our best to do that,
Mhm.
But there are things that are going to happen. The key thing to remember, it's not like these things are coming as a surprise,
Mhm.
okay? I'm trying to say that markets do their correction sometimes ahead of time because they know it's coming. That's why Inga keeps saying you're putting it in the hands of professionals, right? When the government says they're doing a bailout,
Mhm.
right? They're aware of it. The markets are aware of it already, right? It doesn't just it's not like they get out of bed, oh, the government's bailing out. When people are professionals, they understand. They see recessions coming how far in advance, and inflation how far in advance, Inca. They see shortages years in advance, right?
Yes.
They know the election's coming. Everybody's known that there's going to be elections are coming,
Mhm.
right? And so world conflicts, all of these things are taken into consideration ahead of time, a lot of times. And you can track it as, if you want, where economy's done real well at times when you think it should have done badly.
Yeah.
And
Yes.
sometimes the economy has done poorly when everything is great. Like you wake up one day, why is the economy doing bad, right? Right? But over the long term, some of these things are temporary.
Mhm.
It's like many things in life, right?
Mhm.
That are temporary, right? If all of a sudden my family of 4 from Jamaica comes up and stays with me, I need more food in the house, right? When we go to bed is a different time.
Yeah.
I got more gas is being used in my house, but I already know they're not staying. They're only here for a week.
Mhm.
So I make accommodations for the week. I don't need to do anything special for that week, right? I know it's coming. I've already planned for it. Got to spend a little bit more money, blah, blah, blah,
Mhm.
right? The same thing goes with the professionals. They kind of know this stuff's coming. That's why they advise their clients. They kind of know it ahead of time to stay strong, to keep vigilant, because they will leave.
Mhm.
My family will leave and go back. Hopefully they leave my house in shape that they found it in. And then all of a sudden, I have the house to myself again, right? And it feels great. The markets are no different. We are planning for those visits
Okay.
all the time. Inka, you have anything to add to that?
No, I like the example on your family visits.
Yeah.
So political activity and market activity.
Mm-hmm.
Is there any alignment, any relationship? In reality, very little to none. But subconsciously, the society that we live in
Mm-hmm.
have some level of belief that a president could impact their stock market performance.
Mm-hmm.
There's not enough data to say that's true. Whether or not, we'd like to believe in it or not, but that's what happens. There's always some type of impact. Not even an impact, some reaction in the market when a president either comes to the office or one leaves. And I'm sure you could imagine what happens to the stock market in November of this year, depending on who wins. You could even guess that if this person wins, the stock market is going to go up. If this person wins, the stock market is going to go down.
Mm-hmm.
I'm not going to mention any names for the purpose of this show,
Yes.
but you use your imagination. And then now the question is that based on some scientific data-proven result? No. It's just our behavior as human beings. We believe one person is going to make an impact because presidents rarely have any impact. And I think I said it on another show. Congress and the Treasury have a bigger impact on the stock market than the actual president. What the president controls is the nomination of the chair of the Treasury, right? Okay, so you can kind of get a sentiment. Maybe some of the tax code, okay, all right. You have direct impact on those. But generally speaking, the presidents don't really impact the market, even though political activity often dictates what the performance could look like. In the example Professor Thompson gave us is incredible. If people are hearing rumors that the U.S. is going to be involved in a large-scale war effort, the market is going to react. It may never happen. It may be a year away, maybe 2 years, but that's just the rumors.
Mm-hmm.
People start panicking, right? And there's a market impact to that panic. So all those type of behaviors, obviously, we as human beings, we have tied the stock market to some aspect of the political climate, which may not necessarily be a true thing. Because ultimately, I said this before, the company's performance is what should govern the stock price, not whether or not there's a president that you like, whether or not there's some policy that you think is favorable from the tax code that this president is proposing, tax 50% or increase capital gains. Market performance, because the company's stock is based on their own individual performance. So you see these things and you just tell yourself, this is just the part of the reactionary part of our economy. And these are mostly followers. And that's fine. It's all balances out. You have the leaders, you have the followers, and you have people who are professionals who just don't even watch the news. They just open their fundamentals, they read through it, they see what this company is doing, what they invest in, what they're planning to do next year. To one of the points raised earlier, they look at the leadership of the company, they look at the balance sheet to make those decisions. And then there's a core part of the society that just market sentiment, they make a move based on how they feel. And so I think long term is very obvious who the winners and losers will be in those scenarios.
When in my business classes, whether or not it's just entrepreneurship or whether it's marketing, we all go, there's a couple of things we always do in those. We always do a SWOT analysis.
Yes.
Every class we do SWOT analysis, strengths,
I can attest
weaknesses,
to that.
opportunities, and threats. But the other thing that every student, we make sure they know how to read a 10K.
Yes.
Nice.
Yep.
And so that's part of the class. They have to do the 10K. The great thing about the 10K, other than, yes, all the financial data is there, all the performance is there, the numbers are there, right? That's beautiful. But you'd be surprised that in the first few pages are the CEO or the board of directors are just literally just talking to you about the climate in plain English. It's the 10K is in plain English. Well, last year we're thinking about going into this markets. I will tell you, when I supported many accounts, I would walk into many large accounts, and I would tell them that their company's growing here, and they're going to invest over here, and you're going to expand here, and you're going to do it's right there in the 10K.
Wow.
And the vice president I'm sitting in front of has no idea of the company direction.
Wow.
Yeah. So
So they don't read their own 10K.
They don't read their own annual report. Even within the company, sometimes people are making emotional decisions, right? But if you really take a step back and you take a read, you'll realize that many companies, even though, Fortune 500 companies are only 1% of the companies in the United States, but they still make up about 65% of the country's GDP. You realize they really have a handle on this, on what they're doing. Okay, and that can kind of calm you down. So, yes, and I think Inca's also meant to, yes, it's very good to leave it in the hands of the professionals, right? But the information is at your fingertips nowadays.
True.
Just to read, not unemotionally read, right? I said it in one previous pocket, make your life easy. You buy Nike shoes, invest in Nike, right?
Yes.
Get a stock.
Yes.
Read their information, right? Understand. So you're the only one surprised because the information is there, right? So you don't have to be surprised. You can now, everything's in your fingertip. How has inflation affected the markets in the past? And you'll see, not a lot. How has this wars affected the market? You can now Google or Chat GPT or whatever you feel like to get information, how it affects you. And I'm not telling you to do that for you to go out there and make your own investment decision. I'm doing that to have you take the emotion out of it. Because it's really not as bad as it looks. And normally it's not as great as it looks, right? So that's why you need to be like the market, be steady when it comes to investing.
And I like that both of you actually mentioned it, but I like the way you put it right now, that you have to remove your emotions from it and kind of, be steady about it. Because, we just discussed, hey, there's kind of like that fight or flight reaction to bad news, right? But I would like to cover too, how do you do it, or should you do more or less the same thing when, as an investor, you have that sentiment of greed, or of greed, of wanting to pursue more, a higher profit in the market?
I wish it was only, and I'll have Inca talk to this more than I am, but I wish it was only fright or flight. I wish it was only, I'm going to run away from this.
Yes.
Or I'm just going to do anything. I'm just going to stand still and do nothing. But the reality is, people run to things, too. Right? They're easily persuaded.
Okay.
Right? I can't tell you how many times that people have sent me stuff that says, I bought this for $1 and it's not $5. You need to get in now. This is like the thing to come, right? 2 weeks later, I hear nothing about it. What happened? What happened to this? What happened to this great deal you came to me? People run to things. We'd want to think that everybody runs out of a burning building, right? Or stand still, but some people do move forward. They're stubborn.
Yes.
Right? That's why they got bears and bulls, right?
Yes.
Right?
Good point. Good point.
Right.
Way to bring it back in.
Who's the stubborn one, right? Right. So they're gonna. So that's a situation. So we have to find mechanisms to protect ourselves from ourselves.
Oh, okay. Okay.
Yeah. So, but yes, emotion. I remember I went to a military school in Melbourne, Florida Academy. And I remember one time when I was a freshman, I think somebody punched me or something, hit me.
Yeesh.
Right? It was military school, so, there's this corporal kind of punishment thing going on.
Okay.
Boom! Somebody hit me hard, man. And I was like, what? Okay. So I laid into this person. I smacked him. I hit him, right? And then we both were brought in front of the principal, or, because it's a military school, the colonel, right? And we were given punishment. And used to have a thing called 8 and 8 and 8. It's 8 hours of work on Saturday and 8 hours of work on Sunday. So depending on how bad you were, you get, if it was a minor infraction, you get 8 hours. If it was a major infraction, you got 8 and 8. That means you worked 8 hours Saturday and Sunday. So the guy who punched me got 8 hours Saturday. I punched him back. I got 8 and 8, 16 hours for the weekend. I said, what the heck is this? I didn't start it. And it was a lesson to tell me that my reaction to things, the way I do things when punched in the face, when given adversity, when something happens, the way I react. Again, I'm not as concerned about the fright or the flight, right? As much as I am the people who react, who go and do things, who go and do dumb things and stupid things and crazy things, and they take the same money and they put it somewhere else. It's very easy to talk somebody into, if all of a sudden, just think about this, if all of a sudden you have a situation where, because emotionally you're afraid of the marketplace, you're very easily manipulated now.
Right.
Somebody could walk into you easily and say, oh, hey, don't put your money there. But you didn't look at the fundamentals, right? Like Yinka says, the stock market has, put against every other investment, has been the best performance, right?
Facts.
Facts, right? Against anything. But yet people will emotionally follow. So yes, I wish it was just fight or flight, but people do react
Okay.
during times of emotion,
Okay.
right? How many times has somebody, even in normal society, like something happens and you take the law into your own hands, or you try to get into, if we're going to talk about emotions, we're talking about the natural emotions of human beings. It's not just about investment, it's just in general.
Carries.
Something happens to you and you feel that you're judge, jury, and executioner, right? Right? The same thing happens when people and their money.
Right.
Right?
Right. No, I like that. Trying to capture the essence of the question you asked when you asked about greed, right? Some of us are old enough to remember the movie Wall Street, Michael Douglas. It's a famous quote in there.
Yep, I know the
It
one.
says, "Greed is good."
Greed is good. I remember that. Greed is good.
Yes. And that context, although it was motivational for the people he was talking to help them trade on the edge, I guess, and seek every possible way to get the highest returns possible. But personally, I could tell you, every time I reacted with greed, I lost money. I can't even imagine the last time I bought a stock or made a trade based on greed that I came out on top. Hardly ever. But I could tell you, 99% of the time where I traded on fundamentals, I came out on top. I took a step back, I'll name names, right? Coinbase came out. When Coinbase IPO'd, I felt like I lost out on a lot of major crypto space investment. Everybody was rushing into the building. I said, let me rush with them. I bought it, very high price. That was greed. I did not care about any fundamentals. I just need to get into the space. I lost because the stock eventually came down. And the complete opposite, when Netflix increased their price, for one of the first times they increased their price, long time ago, everybody was selling their stocks, their shares, and the share price plummeted. That was a reaction out of fear. But what did I do? I just took my time, read the fundamentals, read their books. I'm like, wait a minute. There's no way they're going to go out of business because they increased the price by $1.
Right.
So I bought shares, and that's probably one of the best performing shares I've had in a while. So there's different approaches when we talk about greed. But ultimately, I think the backstory that Professor Thompson gave is a good example, is that sometimes your reaction is going to cost you way more than the actual event. And so what we say is that you should be governed by logic, you should be governed by fundamentals. A little greed here and there, a little reaction here and there is not a bad thing, but when it comes to investing, investment could be supported by a lot of more factual data points that you could use to make your decision logical. It's always very odd when people say buy this stock and then you ask them why, and they say everybody's buying it. I'm like,
Yes.
okay, that's not the answer I was expecting. Everybody's buying it? I think I'll pass. So my answer to that, 99% of the time when someone says, hey, you should buy this because everybody's buying it, they say it's going to be good.
they say it's going to be good, I think I'll pass.
You know, it's kind of funny that you say that. It's like, there are no secrets out here, right?
Right.
Why do you feel, it comes to me all the time, there's this magic pill that if you, hey man, this pill, I know, I'm not going to name any names, but this is going to be like revolutionary.
Right.
Why?
Right.
Why is it, why does nobody know about this? why does this,
good point.
you know,
Good point.
why does everybody know? Why am I the special person to get this information? Why do, look, there's two things, right? Because we're talking about emotions and we're talking about reactions, and one thing is to be emotional, and then it's another thing to act without information, right? Act without information,
Yes.
right? People have done it all the time. Something comes in their house, they walk into their home, something's missing. The last person that was there
Boom.
was your brother, he's automatically guilty. Let me go beat him up, right? So you're reacting to lack of information, right? You know, it's funny, every time it's called a get-rich-quick scheme, right? I've heard them all, everybody's approached me. They figured, hey, what better spokesperson than Professor Thompson, right? If you tell him and he tells the world, his followers will just go, I'm sure, Yinka, you're the same way. You know, they're going to, if you endorse something, boom. And yeah, if I just endorsed everything because somebody tells me, oh, you know, this is going to double your money or triple your money or quadruple your money, you know, first of all, most of the time it will fail because I've seen them fail, and I've lost total credibility, right? And so that's why the professionals, as you always talk about, can't be emotional.
Right.
They can't be, because there's a lot of people, just like the doctor analogy that I gave you, the minute you make a bad decision, they'll never come back.
Right.
And it'll be public.
Right.
You know, so have all the information before, and just understand, if there's one thing you understand, is that your parents told you this from you were a kid. Your parents said, I'm telling you this now, you won't understand it now.
Right.
But when you get older, and by the time you get to 18, you're repeating your parents. You're
Yes.
you're repeating
Yes.
what they said, right? And it's the same thing goes when it comes to investing, okay? They're giving you the caution flags, right? You've got all these emotionals, and they're telling you, trust us.
Right.
So trust them. And trust me, 10 years from now, you'll be giving the same advice to young investors that
may not listen.
professional, they won't listen to you. They won't, but most of them would at least, what did they say once? In life, it doesn't matter in life if anybody does what you say. What does matter in life is that nobody can say you never told them. Okay?
I'm going to borrow that one. Man.
I like that. I like
I'm going to
that.
borrow that one.
I can walk away today and tell you something with a clear heart, and I actually walk out the door, and the next day, and you went out and you did whatever you wanted, I'm still have a clear mind and heart,
Ooh, I love that one.
Right?
That's a good one.
right? Because it
That's a good one.
doesn't matter if you do what I say. You could just never say, Professor Thompson never told you, ever. Okay? So the same thing goes with investments, right? Your broker, you find somebody you trust, they're going to give you the right information. If you don't follow it and you go elsewhere, you can't go back to him and say, why did, no, he told you.
Yes.
Right.
Yes.
So that's why you find someone you trust.
Man, I do not. I'm not going to go after that. You go after that one.
I don't
You
think-
go after that one.
I don't think I can argue against that. Professor Thompson's dropping
You're not
the.
going to try to follow that one.
They keep on bringing up
No.
age up in here,
I'm not
knowing
kidding.
I'm the old man in the house.
He's dropping the wisdom of age.
I'm not definitely following that one, man. Wow. I'm going to reuse that one.
Yeah, you're welcome. You're
Doesn't
welcome.
matter what.
I'm sure I stole it from somebody.
Oh my God, that was a good one. All right, back to
Actually,
you.
If I can get our producer in the fish tank, because I was looking for a few quotes, and I found one that I'd like to have put up right quick. So I'm not sure if it's up there just yet,
It's behind you.
Behind me?
I'm not emotional.
Oh, yeah, it is.
Go
behind
ahead.
me. Cool.
I'll let you read it.
I can't read. I don't have eyes in the back of my head. So, I have this quote by Bill Ackman. Many people know him as he's a very important figure on Wall Street, and he has this quote about not being emotional about investments, but investing is something where you have to be purely rational and not let the emotions affect your decision making, just the facts, right? So, is this more or less like the summary of what you guys were saying?
We're not robots.
Yes, yes.
Okay. The statement's a little bit robotic to me. Okay. We do have emotions, right? But what we do is we come up with a system. A system. The system is, I can't say this anymore clearly. There's nothing easy in this world, right? Everything is worth having. You worked hard for it. You worked hard for it, okay? So what happens is that just taking the emotion out of it is not enough, right? It's a system. It's checks and balances.
Okay.
Right? You might have a group that you talk to about investment. You might have your professional that you talk to that manages your money. You might have peers, right? The question is, to me, is more that, yes, you take the emotion out of it, but you're expecting a lot for people to just know the facts, right? It takes a lot.
Yes.
Right?
Okay.
So you're never going to know the facts on your own. You don't have enough time. So you have to, like with everything, you create this little village, right? And of people that you sit down and you trust, and you sit back, and then you almost like what we talked about, you let them provide what they know best. Let the experts do the stuff. I don't care how many flights, because Yinka's a world traveler, He's got more frequent flyer miles than anybody in the world. He travels the world. He sits back. He's a worldwide. When he calls American Express, he'd be like, "Oh, that's Yinka. Okay, he goes anywhere."
Yeah, right.
Okay,
He owns half the airline.
he goes to the airline.
I
He gets the
wish.
VIP treatment. He stays and all this stuff. And but when I see Yinka on the plane, he better not be walking into the pilots, because I don't want him flying the plane. He could be the most, he might have 2 million frequent flyer miles, been on 1 million planes, right? I don't want him flying my plane.
Right.
I want him sitting beside me and talking to me about the trips, right? The same thing goes with investing. I don't want you as an investor have a system, and you shouldn't be doing it by yourself. So I don't know if you have any.
I can't even add to that.
Okay.
I think that's a good way to capture it. I think Bill Ackman, obviously one of the most respected investors of our time, right? You could argue about his tactics and all that. That's a different topic for another day, because some people think he does a lot of rogue activity a lot, but then his point is well taken. And I don't remember the story exactly, but one of his biggest losses came from an emotional investment that he made. I wouldn't elaborate on the story, but anybody could kind of follow his journey. But to be honest, I think to Ms. Thompson's point is that it's difficult not to be emotional because we're human beings. But most professions often require you to minimize your emotion. Like, I don't want an emotional pilot. I definitely don't want an emotional doctor. I don't want an emotional accountant. I don't want an emotional investor. So those things kind of help you limit your exposure, because you try as much as possible to operate with facts. But once you cross over into the emotional category, you can't really justify your action based on facts anymore. And obviously, at that point, you're exposing yourself to a lot of risk, because once things are not based on logic anymore, you now have a wide variety of results.
Correct.
Okay.
Right? Typically when you base things on data points, you kind of have a limited view of what could happen. You say, okay, this could happen this way, this could happen this way. But once things are just way broader than you expect it to be from your decision-making standpoint, you definitely have a wide range of risks.
Yeah.
So definitely, emotion is not the best ingredient for your investment strategy. You would definitely save yourself a lot of heartache by trying to be as logical as possible. And when you get into a jam, if you could just taper down and talk to an expert, talk to a professional, you should be fine. You know, emotional buys are the biggest regrets in this country. You know, whether it's during Thanksgiving, where people are buying things during Thanksgiving, or during Christmas. When you have emotional, which is AKA impulsive buy, right? You often regret it. When you go to the car dealership and they upsell you, they make you buy the Mercedes instead of the Toyota. You get home and your spouse kind of screams at you and hits you over the head. You know, it's never a good thing. Or you buy more than what you want, or you buy a more expensive watch, more expensive outfit, more expensive shoes. Whatever it is, those impulsive buys never do well long term. Same thing goes for investing. It's no different. There's nothing special or unique about investing that makes it an outlier when it comes to your emotions. I think it's still the same standard. You're going to make a mistake being emotional.
And what's even scarier is that, yes, I'd rather you tell me that you have a methodology to investing than to tell me that you invest based on facts. Because I will tell you, what's really scary to me is that there's a bunch of people who invest by just following the crowd. I'm just going to follow what everybody's doing.
Yes.
I'm going to follow what my friends are doing. I'm going to follow this person's doing. I remember playing golf with three guys, and it was the hardest round of golf I played because I had to keep my mouth shut for 4 hours because they were so excited about investing in Bitcoin, right? And when I play golf, I don't want to get into arguments or deep discussions. It's about sitting back and relaxing. But I just listened to them for 3 hours. And I could have stopped it with one question, but I didn't. But what I noticed about it is they were just following each other. And I thought at some point, just think about this. We're playing 3 hours. They're talking about crypto and Bitcoin and whatever. It doesn't matter. There's good and bad. People make money. People lose money. It doesn't matter with everything. So I'm not here to debate it at this point. But I didn't hear one person like, wait a minute, what about this? I was looking for perspective from three people excited about something. There's always a perspective. I'm not telling you to be the naysayer or be the Debbie Downer or I apologize to Debbie. But the Debbie Downer that says, look, you know, we shouldn't do this. Not one person. So I'm there. That's the one thing I got away from it. It had nothing to do with investing in Bitcoin and everything. It's like, how can these people talk about investing largest amount of money, doing all these things, and not one person in the group said, well, maybe we should consider this, or what's going on with this. And so that's a pitfall, right, that people go into. There's facts. Yes, there is methodology. But there's also this follow mentality that people will just do because somebody else said. And you know the reason for that? They're lazy. Lazy people just follow other people. That's why there's followers and leaders in this world. If you're going to be lazy about investment, what do you think about being lazy about investing? Not forgetting your fundamentals or understanding it?
You're going to have some problems. You're going to run into some deep holes. And this is why, you know, we say be passive. If you're going to be lazy, might as well be passive.
Yeah.
And delegate it, right?
And have no emotion in the right.
No emotional, let the professionals do it, and you just check the statements every year.
Exactly, every year, not every day,
or
not every hour.
Definitely not every hour.
Not every closing.
I'll close out, as I thought about this conversation, I thought about, you know, I always try to fact check myself. So I thought about it. In what circumstance in investing is being a follower good? Or being a follower exists in a strategic way? It's in index funds.
Okay.
Because index funds are indexed to something. What is S&P 500? S&P 500 is a whole bunch of stocks. There's index funds that's indexed against the S&P 500, which means whoever's managing it is not looking for stocks. He's just saying, whatever this S&P 500 is doing this year, I'm just going to put my money there and let the appreciation of the S&P 500 overall take care of my investment. So even in investing, but I think Professor Thompson made a good point where it's a strategic following because you index and because you have a, 30, 40, 50-year data point that you can see the appreciation of the S&P 500, you know it's going to do well over time. So in that strategy, it's following, but it's strategic. I just wanted to throw that in there.
Absolutely.
To make sure we talk about index fund. I like index fund.
Well, I think I can say we probably have to start wrapping it up.
Okay.
I know our director back there, Steven Spielberg, he probably has more movies to go produce after this. I do have to give a very big thank you to Professor Thompson. As I said, I can wholeheartedly say I'm proud to have this man
Where's
as a
my
professor.
check? Where's my check?
Write the check right now.
Oh my goodness.
Where's
my wallet?
I say this for the check. That's what I say it for. But no, in all seriousness, I can say I'm very proud to have this man as a professor. He's a very good professor. Professor Thompson, thank you for being here today. Yinka, thank you for being here today with us.
Pleasure.
And to our audience out there, this has been another episode of Between Bears and Bulls. We got down to discussing emotional investments. We got down to discussing a little bit about politics and the way politics invest economics, as well as the way it invests an investor's psychology and their behavior based on what's happening between politics and their emotions. So, with this, we close out. We say thank you to our audience, and we'll see you next time.
Thank you.
Thank
This
you.
has been great.
Thank you. Did you?